Of course.
So
So,
yeah, we can start.
okay, awesome. So it was nice to meet you. So you reached out to me because you wanted to help with back testing and higher time frame analysis of the market and how to flow with the market and better entries, right?
Exactly. Yes, exactly.
Okay. So one thing that I
Mhm.
wanted to go over, and my question first would be, have you seen the order flow and structure video that I uploaded in the Discord group like a week ago?
Yes, yes.
Okay. So
Yeah, I've seen that.
I'm having a lot of questions from people specifically on order flow. And so I figured what I would do is I would start by explaining this topic to you in maybe a slightly different way, right? So
Yes.
let's say, for example, we're trading 15-minute structure, right? And anytime you have a question, you can feel free to interrupt me and I will answer your question, okay? So
Yes, of course.
let
Yes.
me get the proper tool here. So 15-minute in this scenario, for example, both of these scenarios, it's bullish. So we've broken structure. We can expect continuation to the upside, correct? And in most cases, people are going to do one of two things. They're going to set an entry at, let's say, for example, at the extreme, the sell to buy engulfing, right?
Yes.
Like this. This is what most people do, I've noticed, is what they have their limits. And then what they're going to target is they're going to target the high of that 15-minute, right? That's
Yeah.
kind of what they're looking for. So
Yes.
what I wanted to explain and go over with order flow, and this is something that I think is going to help you with back testing, and it's like in your back testing scenario that we're going to go over, and at the same time, this is going to help you a lot for your actual entries. One thing that I like to let people know is that the reason why we wait for confirmation entries, most people don't realize what a confirmation entry really is. The idea behind that is basically you are having order flow give you the confirmation that that point of interest has a reason to hold. And if all things else make sense in terms of, for example, if that POI is strong, if it's pro trend, if the order flow is going to continue, then what we can expect is a confirmation like entry, right? Now, sometimes what we'll see is that we'll have entries that are extremely impulsive. And so sometimes you'll have a tap of a point of interest, and on a 1 minute, you'll just see it explode and it takes off, right? And so sometimes we won't see in particular that specific opportunity for entry. And so what we like to do is we like to talk time frames. So for example, if we have a 15-minute break of structure, and let's say, for example, when we have 15-minute break of structure, whenever we have a break of structure, we can begin to expect that there may become a need for some sort of pullback, right? And usually our entries are going to be somewhere within that pullback, right? And in most cases, people are going to wait for the pullback to come into a specific point of interest. Sometimes it'll miss us and we don't get tapped, and other times it does and it gives us entries on a lower time frame, right?
Yes, yes.
So at the current moment for both of these examples, structure is bullish and we have a 15-minute break to the upside. Now, upon the pullback, what we're going to see is that current order flow is going to be in a pullback that it looks like it's going to be bearish. So 1 minute structure is going to be bearish, but that 1 minute
Yes.
structure is the order flow of that current 15-minute move. And all we are doing is we're
Yes.
fulfilling the need for a pullback. And
To
that,
come to the demand zone, right?
yes, right?
Yes.
And so the idea what we're looking for when it comes to order flow is we are waiting for confirmation on that lower time frame that gives us an entry. So for example, if we were, let's say, if this was 15-minute break of structure and this is the 15-minute pullback, you're going to see that the pullback is going to not really come back to the supply levels, right? You're not going to get a pullback to here to push lower pricing. Price is going to be corrective until we get to this area for continuation. right? We might have less buy to sells pulling back to demand. Now, if this is the 1 minute time frame, you're going to see that structure is going to be a little more corrective. It's going to be a little bit more clean and more opportunities for pullbacks, right? Now, in this case, because we know structure is bullish on the 15-minute, what we want to wait for is for 1 minute or seconds time frame structure and order flow to align with the higher time frame or medium time frame bias, right? And so when we get a tap of, let's say, a 1 minute POI like this in this example, what we see here, what most people are going to see is that here we take some liquidity. Let's do it like this, right? So this is the liquidation into the mitigation, right? We have a V-shaped recovery. As you can see that from here, what we've basically done is we've had a very aggressive recovery of price and we've changed character, right?
Exactly.
And when that happens,
yes, I know these confirmations, as you say, liquidation, mitigation, V-shaped recovery, then chalk, flip as well, right?
Yes, right? So the point of what I wanted to show you was basically when we're trading with 1 minute POIs, when it comes to seconds entry, we're waiting for this to happen, but on a lower time frame. So this on the 1 minute, if we're looking, this is what we can wait for. So when I'm trading, for example, a 1 minute POI or 1 minute structure, I'm using the seconds to give me that first sign of bullish intentions, right? Once I begin to see order flow on the 15-second or the 5-second on a 1 minute POI, then I can begin to think, okay, it's time to get an entry, and I might look for something like this, right? So that's what order flow is about when it comes to seconds time frame.
I would like to interrupt you here actually. As far as I have been trading, these seconds, as far as I have been trading the seconds, I have been getting many losses. So what I see, what I personally see, I only trade the 1 minute, and I only wait for a bullish candle.
Okay.
Yes, after the liquidation mitigation, and we have the V-shaped recovery as well. And then at the flip zone of the 1 minute flip zone, I wait for the engulfing candle and then I enter. Is that the right way? What do you suggest?
Well,
Are
I
you getting? Are
I
you get? Yes.
I agree with you that the seconds time frame is a lot easier to take losses from. I, in
Yes.
particular,
Yes.
prefer to take second time frame when everything else is in alignment. So I'll make
Okay.
sure that the 15-minute and the 4-hour are pro trend, right? If they're both in alignment, then I'm okay taking a seconds from a 1 minute POI. If it's a refined extreme, then it makes sense. And the reason why I wanted to go over this is because since we're going to do some back testing, I wanted to go over yesterday's session and I wanted to see what you'd find. And I also wanted you to understand, let's say, why I took certain type of entries, you know?
Okay.
So this is kind of preparation for that specific example.
Yeah, I got it.
So when it comes to your higher time frame that you're looking for, because it says here that you want some help with overall higher time frame analysis. What is
Yes,
it that you're struggling
exactly.
with?
Actually, most of the time I have noticed that most of the times I am looking at the wrong side of the market. If I am looking for the shorts, the market is being bought, and vice versa. That is the main problem. And then my psychology is disturbed, and when psychology is disturbed, you keep on taking the bad trades. That is why. So my main problem for me is the high time frame direction. I'm oftenly lost, so that where I have to see. Are you getting?
Yes, I understand. So I think I have an easy way.
So I want to.
Yeah, go ahead.
Yes, please. Yes, please.
Go ahead.
So my question was that when in the morning when I sit on the charts, how should I see the market so that I should be looking for at the right side throughout the session of my trading?
Okay, good question. So
Yeah.
here's my answer. Most people neglect the higher time frames, and that's why they're always on the wrong side of the market. The reason why they do that is because we fall in love with our setups or an idea. So we get attached to the idea that something has to happen before we get that entry. And a lot of times it doesn't happen. For example, if you've seen, I do my pre-market setups, right? And I record what I think is going to happen. And sometimes it happens, sometimes it doesn't, but I have an understanding of what I can expect. For example, if I showed you my own actual markups, right? These were my markups for yesterday's price action. I was waiting for price to come into this 4-hour POI, into this 15-minute. The reason why I said is, well, this looks like it gave a reaction. This reaction looks weak as we have wicks above. It would be great to catch a buy from here because we still have not mitigated the 4-hour. And the 4-hour is a pretty big zone to not have mitigated, right? If we see this, how clear it looks, we have not come into this 4-hour, right? And it's an inside bar, sell to buy, engulfing the break structure directly, right? This didn't even sweep anything on the 4-hour time frame. This came in to fill an imbalance, but we still have some, right? And so
yes,
I could be waiting for this to happen and I would have not caught a single trade, right? The other thing is I know this is a weak 4-hour because this has not broken this low. This is just where we had a pullback. So I understand that that's probably not going to overpower the 4-hour, but it can possibly give us some sort of reaction. I'm not exactly sure what will happen, right? But I can guess what I think is going to happen. And so then, for example, if I look at the 1-hour, I see, okay, we have this 1-hour POI, right? That was engulfing, that took the high. We swept the highs. Price came into tap. Oh, on here, we missed the 15-minute, right? So I'm looking this whole time when the session begins, I'm thinking, okay, well, this is a 1-hour sell to buy pivot, but this is a 15-minute POI that gets engulfed. I say, this is inducement for here. I'm looking to buy, right? But that never happens. I don't get that opportunity, and that's okay.
So, what was the inducement? I missed that.
This
for this for the lower POI. This is the inducement for the lower
15-minute. And
okay, right.
Yes, now you see it, right? And this is what we have a 15-minute break of structure bullish. So in here, this is one bullish push to the upside. So if price came back,
and
it could still retain.
and we were waiting for it to come to that discounted demand, right?
Yes.
And
exactly.
Yes. I was looking the same actually.
Do you see this?
Yesterday.
You see this swing in London?
Yes, I see that.
One thing we could have also said is, okay, this is a strong high as it broke to the downside. A lot of people would have taken shorts from here, right?
Yes, exactly.
And they would have been swept, and then price would have turned around and said, oh, I'm going to try to get back in because it swept, it didn't break, and they're taking shorts here, right? Well, I'll show you some of my trades from yesterday. So to understand this move, I mean, overall, I wanted to see price pull back, but I didn't get that. But this is what I saw. It's kind of messy, so hopefully it makes sense. But this was my first entry, right? I took this long, right? And then I saw that we still hadn't tapped this area, so I was looking to take buys here, right? And so when it comes to your markups, for example, what the point I want to make is we can have an assumption of what we think price is going to do, but at the end of the day, price will still do what it needs to do. And the reason why is because most people are not paying attention to the higher time frame bias. For example, did you do your markups starting on the daily time frame?
Yes, hello.
Yes, you there?
Yeah, sorry.
No problem. So my question was, do you start your markups on the daily time frame?
Yeah, I have marked the daily exactly.
Okay.
Yes.
Were you aware that
We had a break of.
the current daily
Yes.
swing was bullish, right?
Yes, exactly. Yes,
So
exactly.
the
And
daily, yeah,
I was actually anticipating that this daily low would have been broken in the last week, but because of the FOMC move, we saw a 4-hour break of structure.
yes. So
Yes, and after that, I came to know that the daily highs that they have become weak.
yes, I agree. That's what I also think the same. I think these can probably be taken out pretty easily. Um, the reason why I'm asking is because when it comes to your higher time frame bias, most people forget that the daily time frame will overpower the 4 hour. The 4 hour will overpower the 15 minute. The 15 minute will overpower the 1 minute, right? In most cases, for example, here, what this looks like is like we broke structure to the upside, we pulled back, and now we're breaking to make a new high, right? On the 4 hour, this looks kind of clean. We haven't taken it yet, right? Um, but the idea behind what I'm trying to get at is, for example, if we look at pricing from this high to this low, right? And we know that this high is technically weak on the daily time frame. The daily time frame is showing potential to take out these highs, right? The 4 hour time frame has confirmed bullish intentions. So here we have break of structure bullish on the 4 hour, right? So when it comes to this area, we have to remember for one thing is, well, this would be the actual sell to buy range that broke structure, right? But then we also have this POI here, which is the more refined zone that we really want to see price come into, right?
Hello, can you please repeat that again? Actually, because of bad internet connection, it was skipped.
Oh, no problem.
Your last few words.
Okay.
You were saying about the 4-hour bias.
Yes. So
Yes.
most people are not aware of pricing, right? And so in this case, we know from this high to this low, this is a weak
Yes.
swing on the daily time frame because the daily broke to the upside, and right now the extreme is holding. 4 hour broke structure, right? This is the 4 hour POI that makes sense to a lot of people, but we also know that this is the sell to buy engulfing range, right? We can even narrow it down to this, right? This is the last sell to buy before we make that new high, right? And price can come into here, and if it gives a change of character here, we can probably look for longs, right? But most of us would probably still be waiting for here, right? Now,
Yes,
when it
exactly.
comes to this, we know that the 4 hour is bullish. So in order for us to be confident in taking, let's say, bullish pricing buys, right? What we want to see is that order flow on the 15-minute shifts bullish. Because then what we know is that the daily, the 4 hour, and the 15-minute are all in buying favor, right? And so we can expect a lot of impulsiveness. Now, when we were looking at price action yesterday, what we do know is that this buy to sell that made that low was taken, right? And this is the first sign. This is the first sign of bullish order flow entering in this market here, right? Because previous to that, we were bearish. 15-minute was bearish into the 4 hour, right? But this would be, for example, that range that we would be looking for, right? If price comes back into here, right? Now we know on the 1 hour time frame and on the 15-minute that this would be the pivot sell to buy that makes that new high. So in my case, when I'm trading here, right? Here, for example, when we cause this sweep, where's the sweep tool? What we're seeing here is the intention of bullish order flow entering the market. And so this is bullish order flow. Now, at the same time, because we broke with a wick and not a body, that tells me that this is pretty weak because this failed to break structure with a strong closure, right? It swept. So when we see that, we can think, okay, if the low is weak because it failed to break the high, it makes sense because we can come into a more refined zone and use that as inducement to go long, right? But at the same time,
Yes, I
we
was
have to be,
saying the same.
yes, what we have to be aware of is that the current order flow is still 15-minute bullish. And so in our mind, if we see that the 15-minute is bullish, right? This was the first big swing here. We had this, right? Then we know that the 4-hour swing is also bullish, right? This would be the 4-hour swing, right?
Yeah.
All we need to take an entry is to see 1 minute aligned in well-priced territory to go bullish, right? Because now everything would be in alignment. And so what we see is after we take this high, we can be patient here. And this would be, let's see, this would turn on for the session entries. Let's see. I don't see, there we go. Now it's loading. Okay. So right now at this moment, what we see is that the 15-minute structure is bullish and we are watching and seeing that order flow is shifting bearish. So here we made this high. I'll use the red for the change of character. So we made a new high and we took that out, right? So at this moment, this is the first change of character, right? Now, at the same time, you know, we have a demand here. Price could probably hold up from here. We're still waiting to see what's going to happen, right? Then we fail to make a new high and then we take out this low, right? So now we know that the 1 minute is shifting bearish. So what we are going to wait for is price to come into well-priced territory and or to show us an impulsive buy, right? That we can probably buy from. So this would be, I'm going to put this in a very bright color so it sticks out. This is the pricing. So we want to buy below this level.
Yeah, exactly. I see that.
So on the 1 minute here, we continue bearish, bearish. We make this low here, right? We probably
here we have to wait for 1 minute to be aligned bullish so that we can continue the 15-minute and the 4-hour buys.
Yes, exactly. And what we want to wait for is a very strong impulse buy.
Yeah, and at the same time, they are also trapping the sellers because they are unable to broke that high, right? So most of the traders, they were also looking for the sells as you.
So this, in a way, would become an early seller's trap, right? We swept the high, so we took liquidity from this high, which is a strong. Remember that's strong. It broke structure to the downside, right? So we have a lot of buyers in this area, and so we swept them, took out the orders, we pulled back, and it looks like we took the high now, right? That's when we broke this, actually got a break of structure here, right? But here's why this makes sense, right? At this moment, you can see that order flow was favoring bearish intentions, and you can see that we have very impulsive sells, right? So if I'm going to mark these, for example, you can see that we have very aggressive sells, right? Here we take the high, we're still not in well-priced territory, and then what do? We continue with impulsive sells, right? Here we begin to see potential for changing of character, right? So for example, we have this low, we pull back, right? We make a new low. We sweep that, right? We pull back. Right now, it looks like we're causing some sort of respect of a demand, but at the same time, many of us are still waiting for this. I was still hoping that this was going to get mitigated below, right? Let me keep marking these up here. Change the color to demand. All right. And now we begin to see some bullish order flow entering the market. We have 1, 2, 3 candles. Looks like it's coming up. We've changed character here. We have this, and then we pull back. It looks like this gives us what? A respect of this demand. And what we see here is very unique. It's a sell to buy engulfing that directly breaks structure. This is the first sign of strong bullish order flow entering the market. So this would be the break of structure. And this happens in discount pricing, right? And this also happens after what? After we've had a pullback, we can expect the 15-minute to be aligned with the 4-hour. And this 1-minute bullish break of structure, not just a change of character, break of structure, and holding this demand is the first sign, right?
Yeah.
Now, ideally, the perfect entry would have been something here, right? Entering somewhere in this range. Most people, a lot of people probably would not have caught something like that, right? Make sense? But let me show you, I actually caught the trade, but I entered, where's that trade? This one, right? So this would have been the area here, but I entered up here on the second time frame. So I'm going to show you what I saw so that we can go over the session, right? So this would have been the best entry, right? I did not catch that. So what I did is I went to the second time frame.
You actually missed that, or you intentionally entered late?
I think I was in the restroom when that happened. So I was not at the screen, so I saw it happen, and then I jumped on the screen, and then I caught a seconds entry. So I'm going to show you right now. Hold on, I'm getting lost in this pricing here. Whoops. Where are we? All the way back here. Okay. I'm going to do bar replay here so I can go over this. Whoops. All right, let's go to the 1 minute and bar replay. I'm going to show you what I saw. Bar replay is a little bit confusing sometimes because when I use it on, I look at multiple timeframes for entry, right? So sometimes you won't see it on the 1 minute only. Okay. So let me show you how I enter my trades. I have the same rules, right? 4-hour was bullish, 15 minutes bullish, 1 minute broke structure bullish, and it did so with very impulsiveness, right? So once I have a 1 minute change of character or a break of structure like this in alignment, what I do is I look for a 15-second change of character, okay? So now what I did at this moment is I jumped to the 15-second. So obviously we know that I missed this entry. So we're going to go ahead and skip through that a little bit, right?
Yeah.
So let me show you what I was looking at. Okay, so right here, what I'm looking for specifically is I know this is a sell to buy engulfing that breaks structure. I know that we have supply here, right? This is a weak supply. And the reason why it's weak is because at the current moment, this failed to break this demand. We know that the 1 minute is stronger. And so what I wanted to take is a potential flip. So I have two things. This doesn't happen all the time, right? But if price comes into here, I want to see a flip where I get a reaction, invalidate it, and I entered entry.
You entered at the fail of that reaction, right?
The what?
You entered when the reaction failed.
Yes, right? So you can enter two ways, right? And this depends on your particular rules. You can enter after the first reaction, right? So if the first reaction fails, right, then what you can assume is that this point of interest might not hold, right? And you're able to take that with aggression. The best way to take it, which would be the most wise way to take it, would be to wait for it to fail and then come back to get that entry. But if you remember, because we are powered by the 4-hour and the 15-minute, that tells us that there's going to be a lot of aggression in the market. We saw how impulsive this buy was, right? And so sometimes we might not get that entry. So what I'm going to do is I'm going to go to the 5-second and I'm going to play this a little bit more aggressive. So here's what I was looking for. I said, okay, at this current moment, I see that we gave a reaction to the extreme. We now formed these sell to buy ranges that broke structure, right? So this is what I'm looking for. This is my whole thought process as I'm taking these areas. I say, okay, this one's unmitigated. I said, if I can see one of two things happening, price can come back to mitigate to the point of interest. This is a sell to buy that push price into the supply. So if I get an entry here, I'm taking it, right? If that doesn't happen, then I'm going to wait for something here to happen like that, right? So I was waiting with a potential entry here if that happens, right? And this would be, I had like, I think a 1.5 pip that I was willing to risk on this one, right? And we're going to see what happens, right? So right now I see that we've given the first reaction, right? And so what I want to see is this go if I'm going to be very aggressive here. So change there. So bar replay. Okay, so that high goes. So now what I formed here is a sell to buy that is taking this, what do you call it? This sell to buy that's taking this area, right?
Yeah.
Sorry, how would I call it? This took out the first reaction on the seconds time frame, right? And so now here's what I'm looking at. Right now, this looks like it swept a little bit. So I'm thinking, okay, let's see if this is going to give us, if this is going to end up creating this move, right? Let's see if this happens, right? Maybe we get that. So then this becomes a 5-second supply range, right? And here's how I took this entry. Because this is a buy to sell, it took the high and then it took the low. Now what this is telling me is that 5-second is showing a decision to go bearish at this moment. So if I'm going to take an entry, because this 5-second high is strong and it's reacting to what looks like the equilibrium or where the concentration of that supply is, I'm willing to set an entry for 1.5 pip stop loss just above here. So if price takes out this supply level that's considered strong on the 5 seconds, then what I'm going
So
to
you entered manually here, or you placed the order?
Yes, I did it manually, but you can also
Okay.
set a sell stop. The problem is it's very hard to set sell stops or buy stops. Sorry, it would be a buy stop.
Yeah.
Because on
buy
the
stop.
seconds time frame, it's very hard to match it up with MT5, right?
Yeah, exactly. It's very fast.
Yeah, so on the seconds time frame right now, this took the high and it's taking the low. So ideally, most people would be looking for this, and that would make sense, right? In my mind, if I see this happen, what I have is an early seller's trap on the 5-second. If it takes this high, I want to be in it, because then this is now a liquidity POI. This would have taken the low and then taken the high, and then that should hold. It should not go, right?
Yeah.
So let's see how this plays out. Okay, we're not triggered in yet. We're not triggered in yet. Not yet. There we are. We're triggered in. So now that we've taken this high, right? This is where we take that high. Now we're assuming that this is a new range. We have a sell to buy range here. And as long as this is protected, right, which it should, this is going to take out that supply. And so we'll see what happens with price. All right. Now what we've done is we've created a new range, and we've taken the first
demands are being respected.
The what?
The demands are being respected and
exactly
supplies are being filled.
And so to put it simple, what we are seeing is that the 5-second is basically aligning with 1 minute. Because if you remember, the 15-minute and the 4-hour are bullish, but look, this is 1 minute structure, right? Swing. Yeah. So as long as this does not go, the 1 minute remains bullish structure. And because I was not able to get an entry here, at the same time, we didn't have enough confirmation. This would have been somewhat good confirmation, but let's see, I mean, this is probably where I would have rather entered, right? And I probably would have missed this because, you know, at the same time, this didn't come deep enough here. And if I want to protect the low.
No proper mitigation.
Right? And at the same time, I don't know, what if that was all inducement for this, right?
Yeah, exactly.
But the idea here is what I'm seeing now and I'm trading is I'm trading a 5-second flip confirmation of 5-second order flow driven by
Okay, what if
market structure.
okay,
15
what if yeah, I have a question. What if your entry would have failed and it came lower to that unmitigated zone which you are the two zones which you have marked below,
yeah.
those are unmitigated. What
So
if that would have happened?
so here's how I see this, right? So
Yeah.
at this time frame right here, look at we have this is the liquidity that we built up to take, right? So here we have weak highs, right? And this is a sell to buy that breaks 1
Yes.
minute structure. So in my mind, if price swept into here, I would believe that
Yeah.
potentially we could have maybe gone an entry. But because 1 minute structure is like this, right? We have this, we have this. This is the extreme of that pullback here. And then we break 1 minute structure. Based off of this, I would expect that 1 minute to have held to form the new leg, right?
Yes.
Price
Yes.
had to take this out. That's already giving me a sign of weakness because I know that the 15-minute and 4-hour are bullish. I would not expect the 1 minute to get taken, right? And at the same time, I would have waited for confirmation. This is how we waited for confirmation here. If price came into here on the 5-second time frame, I would have waited the first strong high on the 5S to go before I'd hit that button to go, right? And
Yeah,
price never
I
came
got it.
there. Yeah. And so now what happens is, what do we have? So let's look at this. Now that we have our entry, this one never got tapped. That's fine. We'll go to the 15 seconds to manage this. So 15 second, right? So we want to see the 1 minute high broken, right? We have another supply in here. This one was not the one that pushed price all the way down, right? So this is considered weak. So I want to see that go. So let's see what happens. Okay.
So you are break even now.
So we broke another swing here, right? So now what I'm going to hello? Hello?
Yes.
Awesome. So sorry, we got disconnected here. So this was our first entry. And now what we have to do is we have to go to the higher time frame and understand where can we take this trade to, right? So at this moment, we know that the 4-hour is bullish. We know the 15-minute is bullish. At the very minimum, we know that we have some points of interests up here that we could potentially look to take, right? We have, this would be the 15-minute extreme of the pullback, right? Now, what we know is that this area failed to break to the downside. So more than likely, this area is going to go and create a new 4-hour swing, right? Now, to be safe, right, we could potentially have price pull back here. We're not sure. So what we're going to do is we are going to have our targets to be reasonable, and we want to target, let's say, this level up here, right? That would be the supply that we want to target. That'd be a high probability area to come into, right? And at the minimum, what we can expect is to break 15-minute structure, but this would be the most ideal zone, right? So now we're on the 1 minute. Let's watch how price behaves, right? Now this is the same trade that I took, except I had a more conservative take profit. Mine was a 12-hour, and I ended up messing up, and I closed my trade a little bit early, right? But then I took 2 other trades, and we're going to show you those, all right?
Yeah. Okay.
So this is, we're watching 1 minute. All right, so this is where I got messed up on my trade, and I ended up closing, which was kind of silly. I know I messed that one up. This was,
Yeah, you thought that it's going down because it is respecting the supplies, and 1 minute chalk is also there,
exactly.
right?
So I had
Yeah.
some confidence, but I was like, you know what? If it turns around, I don't want to be in it, because remember what had happened previously, we broke structure to the downside here. So I'm thinking maybe this is just going to pull back before continuing to the downside. So I was like, gosh, I mean, I'm really looking for this demand to get tapped. So I was a little unsure. So I closed this one at 2R. So I messed up big time, right? But it's all right. I took other trades anyway. So when this happens, right, we can get some, for example, here we have a pullback before we have this buy. We have a lot of wicks here. Change of characters happen in here, but we should stay focused on the plan, right? Price continues higher, right? So let's keep watching this. This is running very aggressively and impulsively. And you can see the
problem. It was a London Open move.
The what?
It was London Open move.
Yes, it was London. This was London.
Yeah.
So you can see how aggressive price is, and it never comes back. I was looking for a re-entry here after I closed because I realized that I messed up, and I never got filled on that one. So price didn't pull back. And the reason why it's not going to pull back and it's so aggressive is because the 4-hour and 15-minute are fueling this trade. So it's very unlikely that something like that's going to fuel, right?
Yeah.
So let's keep watching here. So here we have a
we have another.
In order for
another POI.
The what?
We have another POI.
Yeah, we have a range here, right?
Yes.
We have the break, right? And we can look for something in here potentially, right?
Okay.
So let's see what happens on the 1-minute time frame.
So this range is also, we can say, at 5-minute zone.
Yes. Right? Now here's another entry that I took. So this one, what do we see? Remember that we're fueled by the higher time frame. So there's a chance that the higher time frame can take over at any moment. So what do we need to see? 1-minute alignment with 15-minute. So at this moment, order flow was bearish. But what do we see here?
Yeah, engulfing.
And this is a break. It's a break of structure too.
Okay. Yes. Yes.
And
yes.
so here we can say if this is in well-priced territory, it would be a higher probability trade, right? And it is.
Yeah.
So let's say here we took this and we set an entry.
But what if?
Yeah.
But what if it? Yeah. Before you marked it, I was thinking that it must have been inducement for the zone you have, for the range you have marked below.
Yes. So in most cases, I'm going to be looking for inducement. But and the reason why I look for inducement is because if a POI, if we're returning to a point of interest, let me give you an example here, right? Let's say here we break structure like this, right? And we bring commitment. What I want to see is that upon approach, that I can sweep liquidity into that POI, right?
Yes.
Now, here's the thing. In a case when we're trading order flow and structure is pro-trend on all other time frames, what we can do is we can just trade the order flow because it's going to continue doing the same thing. And so in this case, because this has not yet broken the high, right? This would be the high that has
what you're trying to say that in the cases when the price is moving very fast following the M15 and H4 order flow, right? And in these type of cases, they just continue and they don't come back.
Exactly.
In the deeper zones.
This place here had no inducement either, right? It's a 1-minute sell to buy, very aggressive. No.
Yeah, because in the way I am seeing that, I would have waited for the zones that are below, and I would have missed that trade because of that.
Yes.
Because because it never came back.
And most people would have, right? Most people miss those opportunities.
Yes.
These are the trades that I took. And the reason why I'm able to get these trades is only because I understand order flow. That's my same entry. So I'm going to show you. We're going to keep going through this and going to go through one more here, right? So this was the POI. And if you wanted to, you could have waited for 5-second refinement, right? But let me show you what happens. All right, there we're entered in. Once this high goes, you can be a little bit more confident in this trade. We know that the order flow is bullish. Oh, look, we took that. Look how strong that was, right? You see this? Do you see that impulsive candle to the upside?
Yeah.
So here's where I took a loss. I took a loss because after seeing this on a lower time frame, I was willing to set a trade here with a 1.5 pip stop loss, right? And let me show you what ended up happening. Boom.
So you were being aggressive.
Yes,
right?
because I already had one running, right? And I was willing to stack one up. So I took a loss there. But then here's what I did.
Oh.
Right here, what I saw was this, right? We took this high, and now what did we do? We took the low, right?
Okay.
So 1 minute order flow is bearish, but I know that the structure on the 1 minute's bullish. I know that the 15 minutes bullish. I know that the 4 hours bullish, right? So what can I do?
Yes.
I can jump to the 15 seconds to the 5 seconds, and I can wait for order flow on the seconds time frame to go bullish as well, right?
Yeah. Yes, I got it.
Like this. The second entry was a seconds. I'm going to show you.
This entry must have been more safer entry, right?
If what?
This the buy over here.
The
buy
where?
over here would have been more safe. I'm saying that the
Here?
buy over here would have been more safe.
Oh, yes. So this was the 1 minute POI, right? And this was the entry into it, right? And so what ended up happening was this swept liquidity right here, right? Now, the reason why I took this loss as well is if you looked at the seconds entry, look at this. I did get a change of character. So we make this low, we pull back, we make a new low. Here, 5 minute changed bullish, and then it ended up taking that low. So here, I think I took this actually on the seconds time frame, but I took this change of character on the 5 second, and then it failed. Right now, you can see that what we did was we built some structure here. We took the high and then we failed. So what we did here is we formed a buy to sell engulfing, right, on the seconds time frame. So let me show you what I'm looking at for an entry now. What I'm thinking is, okay, if price is going to go bullish, I want to see maybe a flip, some interaction here like that before I can get a pullback to get an entry, right? Because we like flips. So let's see what happens.
Yeah.
Okay. No interaction.
Yes.
But that's showing some strength. Whoa, right? So now what am I going to look for? I now see this is a sell to buy range, right?
Yes.
I now see that I have a V-shaped recovery and change of character, right? And this is all happening very fast, but this is media. So here now, what do we have? The 5 second and 15 second are now on alignment with 1 minute, 15 and 4 hour, right? So in my mind, I'm thinking, okay, if I can get an entry with a 1.5 pip stop loss, I think I took, let me see what my stop loss was on this one. The secondary one was 2 pip stop loss. Okay. All right. If I can take a 2 pip stop loss, I'm willing to take an entry here, right? So let's let me adjust this here. We're gonna wait to see what happens. We're on the 5 seconds. All right, we're coming back here, right? What do we see? If we looked at the pricing on this, now pricing isn't the only thing that's important, right? But anything in here would be good. If I take a trade like this, more than likely this is going to hold because I'd be covering, right? This would be an interaction that we had here to the left on the lower time frame, maybe or maybe not. Doesn't look like it hit. But here we have a pause before we had that commitment. So if we swept this, I would be comfortable being able to take this, and I had a 2 pip stop loss. So for me, that covers it more than anything. I'm covering the 50% and below. So let's see what happens. Okay. Not yet. Did I take it? Let's be patient. Okay. So now here's what we have. We have this new range that's just developed. You see this?
Yeah, I see
So now here's the question. What are we going to do? We did not really mitigate this too well. We tapped the top of it. So now in this case, I can pretty much say, okay, if price comes back here, I'm willing to take this trade because now I have, this could potentially be swept, but we can still be held in. So let me see if price comes back. I got an entry somewhere here. So I'm trying to go through this the way I normally would, right?
Okay.
Okay, perfect. Here we're triggered in, right?
Oh, yeah.
So let's drag this to the right. Here we're triggered in. As long as we don't get taken out, we're all right. And by the way, because this is considered strong, but it could be swept as inducement. So that's fine if it happens.
So you have covered that.
Yeah, I'm covering with 2 pips. If I was trading with the 1 pip stop loss, it might be a little bit harder, right? Now here's what we saw. 15-second and 5-second structure was bullish, right? We just swept liquidity, and here we just shifted bullish. So if I wanted to be extra aggressive or waiting, I could even say maybe I would take an entry here again, right? Maybe.
Yeah, I would like to share something. So most of the time, I get FOMO in these scenarios, like the case in which the price shooted above. Are you listening?
Yeah, I'm listening.
Yeah, and I get FOMO and I just enter at the very top, and I place my stop loss below that V shape, which destroys my risk management, and my stop loss becomes more than like 3 to 4 pips.
Do you have
And
trade
when it hits, no, I haven't traded, but I most of the time
I mean the tool, Trade Assistant. It's a software.
no, I don't get you. Sorry.
Okay, so here's something. I'm gonna text it to you so you can find it. Google this, MT5 Trade Assistant. This is something you're going to look for. I know there's free versions, but there's also the one that I have is a paid version. But there's free versions. Actually, somebody in the Discord linked a video to it. So if you type it in Discord, maybe you'll find the video. But the reason why
Sorry, what was that?
It's a tool. So what it does is when I'm trading, I set automatically that my trade is going to be 2% risk per trade, right? And so if I extend my stop loss size, the tool will automatically change the amount that I'm going to trade. So if instead of, let's say, for example, let's just say you're trading with 1 lot, right? If your trade is 1 lot total for 1 pip, but you take it to 2 pips, now what it's going to do is it's going to trade the size from 1 lot to half a lot, right? And it automatically adjusts it for you. And so what happens is you can't mess up your stop loss by extending it because you set the percentage ahead of time. You know what I mean?
So this tool sets my risk percentage no matter how many pips of stop loss I place.
Yes, you will set it in the beginning. I'll have to show you another time, but the idea behind it is, for example, you'll set your default like stop loss 3 pips. And anytime you hit the button, it will automatically enter the trade and modify the size of your entry for that stop loss that you have set. And so mine, by default, it's at two pips. Sometimes if I find a good entry, I can modify it and drop it to 1 pip or 1.5. But if I'm unsure or we're moving very aggressively that day, I'll leave it at 2 pips, you know?
Okay.
So that's going to help you. I sent you the name of that tool. That tool is going to help you massively.
Okay. Yeah. Thank you. Thank you. I'll look into it.
There's a free version. Look in the Discord. Somebody posted about it, right? That's a good.
Okay.
Right?
Yeah, sure. Thank you so much.
When it comes to fear of missing out, it happens. And that's why what you have to have is strict rules, right? The strict rule is you want to enter after you see alignment. So I think this video is going to help you so much because what we're really going over is order flow alignment. At the whole time that I'm trading, I'm saying 4 hours bullish, 15 minutes bullish. right? What's current order flow? 1 minute structure is bullish. I'm waiting for the seconds to align and I want to see when it aligns, right? So like we took an entry here. The first one was aggressive, right? As we were catching it coming down, but then we saw 5-second go bullish and we took an entry here. Now, here's the thing. If you were covering that stop loss with a 1 pip stop loss, you would have taken a loss. But look, I'm taking 2 pip stop losses or 1.5 pip stop, and I'm covering it very generously because I'd rather have a winning trade than a losing trade, right? And so let me show
Yes.
you what are we going to be targeting? Well, let's go at least 10R here, right? We have 2
Yeah.
entries here and we want to
So
catch
we
at
can
least,
target the same. Yeah.
yeah, we can target
The
this area
same
up here.
supply.
Yeah,
Yeah.
go up here. Something like this would be fine. That's pretty good R, right? So what we're expecting now is the 1 minute to take over and basically carry this bullish. So we're seeing how impulsive prices, right? Once we see the break of structure on the seconds time frame, we'll jump to the 1 minute. Because if we're watching the seconds and you see this, you're probably going to get scared out of a trade. So what we do is we go to the higher time frame and we watch price to do what it needs to do. Now what we are waiting for is if the 1 minute basically fails, right? Okay. All right, perfect. We hit those targets. You could extend your target and say, well, very likely we can hit the same supply as the original entry. Now, here's the difference. The first trade that we took, right, and we have a couple entries on here based on this zone. The first entry that we took here was at the extreme. So this is very well priced, and it's unlikely that price is going to take out all these levels before it hits the supply, right? The higher time frame narrative is still up here. And so what we could be waiting for is to come up here. Now, these trades up here are closer to the supply. So, if you hit a goal, like for me, I wanted to take them at 10R because, they were right underneath the 4-hour and there's a risk of me getting stopped out. Look, there we go. We get a tap, right? So we tap this area and now we close out all of these 3 trades. We have the first one that does, let's say 41R. This one that's the 1 minute entry that does 18.8. And then we took 2 5-second entries that each one did 23R, right?
Yeah. So
But
you took those 2 trades,
I took 3
the
trades.
latest.
I took 3 trades. Let
Yeah,
me show
one you
you
closed early. Yeah. Yeah, one you closed early, right?
right here. 1, 2, 3. So I took the 1
One you
minute.
closed. Yeah,
When do
one
I?
you said that you closed early.
Why did I say I closed it? Is that what you're
You
saying?
you said that you said that the first trade you closed it early at 2 hour.
This one. Yeah.
Yeah, the first one. First one.
I'll show you my markups, right? So I was watching this on the seconds time frame. Usually once I get my entry, I will jump to a higher time frame so that I don't get messed up with the trade. Because sometimes I'm going to be, if I'm watching the seconds time frame, it's very easy to get tricked out of a trade, right? So in this case, I
Yeah.
started seeing this and I was like, okay, this doesn't look too good. I'm thinking this is very efficient price delivery, mitigation to mitigation. I said maybe price is going to come down lower and maybe we'll see this, or maybe we're going to melt and come back for that deeper 15-minute that hasn't been tapped. So as this melted, I was like, all right, I'm closing. And I closed it at like 4 pips with a 2 pip stop loss or 1.8 pip. So I closed this like right around here. And then immediately when I saw this happen, I was like, shoot, I shouldn't have closed it. I'm going to look for a buy back in. I had this area here that I was waiting for an entry, and obviously price never came back.
Yeah.
So that was my mistake, which I almost never, I'm very good at holding my trades, right? I'm very good at holding them, but this time I did mess up. And so I learned my lesson. I missed out on a lot more R, but I still got these 2 trades and I still took profit there with these, which are the same ones. Obviously, it's going to be easier in hindsight, but the idea here behind this is that you build your confidence for in back testing for live trading, right? And I still took 17R yesterday. And that was me trading for 2 hours. I didn't even trade the full session. So 17R for 2 hours. Now, if I was trading all these entries and I had everything, obviously one of these trades would have done even better than all of them, right?
Yes.
So does that make sense? Is that kind of what you were looking for?
Yeah, it completely makes sense. That's perfect.
Is there any questions that I can answer for you? I'm gonna have to get going,
Yeah,
but I want to help you if there's
yeah,
anything else.
yeah, I understand, but I have a few questions. One to two. So, in this scenario, most of the times, as you say, we have many POIs marked. Like before your second and third entry, before your second and third entry, we got two POIs at the bottom as well.
Yes.
So if I was there on charts, I would have waited for those two POIs.
Yes.
So yeah. Uh, so how can we get rid of that?
Yes. So this is gonna happen to everyone, and it's gonna happen all the time, right?
So according to your rules, and we always wait for inducement, and I try to stick to my plans and I strictly want to see an inducement. But in here, I'm sure that I would have missed the trade.
Yeah.
Although I didn't trade it this session, but I am sure that I would have missed the trade.
Yeah.
So yeah,
So to answer your question, right? Most of
yes,
us are going to wait for efficient price delivery. For most
yeah,
people who entered on the 1 minute time frame, you would have
yeah,
only maybe gotten one entry and probably a lot more losses trying to short it. So
exactly,
most people
exactly,
who entered on the 1 minute would not have gotten a single entry. The only one that they
exactly,
maybe would have gotten was this one that I actually missed myself, the original one, right? And
exactly.
even then, we would have had doubts because we were waiting for this to get tapped, right?
Yeah,
So if you are a 1 minute entry person, yesterday's London session really didn't provide valid setups for most of them. Now, if
yeah,
you're a seconds time frame trader, which most people
yeah,
are not going to be because it's a lot harder to understand. You have to have
yeah.
a very
It
good
gives us a lot of
understanding.
stop losses.
Yes, you have to understand order flow very well to use the seconds, because the whole reason why we use seconds time frame, and it took me a long time to understand seconds. If I could
Yeah,
summarize what the seconds time frame is, all it is the first sign of order flow alignment, and that's the only
yeah.
thing you should use it for. Is where does order
Okay,
flow first align, and that will give you your potential entry. So the seconds time frame only makes sense if you're trading from an extreme and if the 4 hour and the 15 minute are in alignment, because if they're not, the seconds are going to get liquidated all the time. If I took a
exactly,
seconds
exactly.
entry here and the 4 hour and the 15 minute are not in alignment, we would have seen this, right? I would have gone in somewhere
Yes.
here, and then I would have seen like another liquidation, right? The only reason why these held is because they're pro trend. And so all I'm doing is I'm basically following the 4 hour and the 15 minute with the most efficient 15 second or 5 second flips. So
Yeah.
most of us, to answer your question in terms of how can you trade them, if you watch the video, I made a video called Missing POIs. Have you seen that before? YouTube.
I'm not sure. I'm not sure.
Okay, so I made a video. You should check it out. It goes more
Yeah.
into the higher time frame, but the idea behind it is how to trade if your point of interest is missed. And that means that on the time frame of the point of interest, you want to see a change of character. So for example, if this is a 1 minute POI and I want to see it get tapped, the only way that I'm willing to take a trade off of this is if the 1 minute structure corrects before that 1 minute POI gets tapped, right? So that would be one of two things. If it fails, then it was an early trap for buyers or sellers. But if it works, then that's exactly where price is going to turn around from. Same with the 4 hour. So if I just looked at the 4 hour chart, let's group all these so that they're um, not blocking the view here. For example, let's look at this area here. Okay, so this is the 4 hour POI, right? If the 4 hour does not get tapped, how do we know if structure is not going to come back and we can trade longs? The way that the missing POIs video explains it that I made, that I haven't seen anyone talk about it yet like this. So I think this is kind of something that would be very helpful because not a lot of people talk about this. I need to see the 4-hour change character. So here I see that this took liquidity before continuing to the downside. So this on the 4-hour time frame is that extreme of that pullback on the 4-hour. So we saw this. This is what the 4-hour looks like here, right? When we take that, whoops. When we take this, what we've done is we've given a 4-hour change of character without tapping the 4-hour POI. So what that does is that now tells us that the 4-hour, even without tapping the POI that we wanted to, is bullish. And so at this moment, I can assume that 4-hour order flow is going to be bullish until it fails, right? Does that make sense? Hello?
Yeah, hello.
Yes, I think you got disconnected for a moment, huh?
Oh yeah, yeah. Sorry,
Okay.
I'm really sorry.
Oh, no problem.
Yeah.
It's okay. We're almost done. I just wanted to show you one thing here. I'm trying to figure out if I can attach this to the chart here. Not exactly sure. Or actually, can you see the thing I just added to the sheet or no? Maybe not.
Which one are you talking about?
Let me new share. Here we go. All right. We have a couple more minutes before I have to get going. All right. Do you see the missing POIs here? This.
Yeah, now I see. Yeah, now I see.
So this is what I'm going about. So for example, right, we have, let's say, these 3 scenarios. On the lower time frame refinement, right? If price comes in and gives a tap, we can get a refined entry, right? If price doesn't tap the refinement and misses it, then we need this time frame to give the change of character, right? But this is the particular scenario that we're focusing on is C. If price entirely misses that range that we're looking at, right? What do we need to see? In this case, what we need to see is whatever time frame that structure is occurring or the POI itself, we need to see that. So for example, we're using the 1 minute. If this is a 1 minute buy to sell engulfing POI, right? What we need to see is a 1 minute change of character outside of that 1 minute POI. If it's inside, we need to see a 5 to 15 second change of character inside the POI, right?
Yeah, I got it.
And so,
and what about those SMC traps which we get?
yes, that is possible.
Yeah.
And that's why specifically I'm addressing that you have, if you're using this technique, you want to be trading pro trend. Notice that all the trades that we took are 4-hour, 15-minute, 1 minute structure pro trend, right?
Yeah.
And therefore, the smart money traps are not going to be affecting us because all of our trades are pro 4-hour, 15-minute. Now,
exactly.
So if we were trading counter trend, I would not be using the seconds time frame as effective unless it was at a extreme POI on a 15-minute that was refined to the 1 minute. Then I would take seconds entry, right? But all of these were in alignment with order flow. And you see how it worked. We hit the supply.
Yeah.
And then that was it.
Exactly. Yeah.
Okay, well, I'm gonna have to get going, but I'm going to upload this recording later today and I'll send it to you in a day or two. And
please.
if you have more questions, you can put them in the Ask Ezra chat and I'll get back to you. And hopefully this session was helpful. We kind of did the back test kind of like you were looking for, but I think it's more relevant because this is not technical scenario. This is very recent. This is yesterday's price action. So it's something we connect more a little bit.
It was very good. It was very good. I really appreciate that. And it was really very good. And I would like that you drop that recording as soon as possible because I want to see it as many times. So Yeah.
course.
So I would be waiting for the recorded session, recording link.
Yes.
That would be really good.
And here's what I'll do. I'm going to share this actual trading view sheet with you. You see all the stuff on the left here, right?
Yeah. Okay.
I'm going to share this document with you so that you can go into this on this time frame
Okay.
and see these seconds markups. And so you can kind of test it yourself and play around with it, okay?
Yeah. Yeah. I got it.
I'm going to send you that. And I'm also going to send you my actual entries that I took specifically.
Okay.
So that way you have both of them. So you can see the difference between what I took and then what what we did together. Okay.
Yeah. Yeah. I got it.
I'm gonna send them
Thank
in
you so much. Thank
Discord.
you.
Okay.
So you will be sending that recording in a day?
Yeah, I will take a day. I'm gonna be busy
Okay.
right now, but I'm going
Yeah.
to
No problem.
yeah.
No
So
problem. No problem.
I'm sending you these right now
So
live here so that I don't forget because I have to get going after this.
yeah.
So coaching new,
So
and then so you'll have them. The first one that I sent you is my live trading sheet that I had yesterday with all my stuff. You can toggle the
yeah.
entries and see the losses that I took. And then when I just sent
Okay.
you at the second one was the one we did together.
Yeah. Yeah. Okay.
All right.
So yeah, I will be waiting for the recording. And thank you so much. It was a really good session.
Of course.
Thank
I'm
you so
glad
much.
that you enjoyed it.
That's all I can
That
say.
was what you're looking for.
Yeah. Yeah. Yeah.
Awesome.
So hoping for the best. Thank you so much again.
Of course. We'll
Take
talk
care.
soon. Have a great day. Bye.
Yeah. Bye. 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 Thank you so much.
Of course. You're welcome.